Exchanges have never faced more challenges and opportunities than they do today. John Lothian News sat down at the 2014 FIA Boca Conference with 6 exchange CEOs to talk about their views on 4 main topics: competition, regulation, growth, and technology. Here's what Garry Jones, CEO of the LME, had to say about each.
Hong Kong Exchange's acquisition of the LME was interesting because for them it was the first real push into new asset class. From a strong base in Asia, essentially equity based. They wanted to move into commodities. They bought the LME because of the strong franchise in metals for the LME, but also as a bridgehead into Asia as well. So that kind of M&A is moving out of your core area into new areas, because I think most exchanges realize to grow at a particular rate, you've got to do it by acquisition, not just organically, because we're all at the mercy of the market and economic growth and market activity. In our business, the biggest single change actually is EMEA in Europe, which essentially means client segregation, which changes the model for brokers. The old FCM model changes because you can't net positions. And it's particularly important in the LME world because all our intermediaries have dual capacity. They make markets in the underlying metals as well as trade on the exchange. So in the past, they would trade with several clients, net the positions, hedge the difference on the exchange. Now, quite often, they have to segregate that, and they have to obviously set up separate accounts. Essentially, the roots of the metal exchange are physical markets, okay? So the growth from our business is getting more out of the metal value chain to start with. So we're now expanding the focus of the LME right across the value chain, from producers, smelters, intermediaries, consumers, recyclers, etc., and then on a global basis. Then secondly, there's a whole financial market value chain with hedge funds, proprietary traders, algos, etc. And we have to make sure that we give more and more access to our markets for that complete range of people. Because in the past, when the LME was owned by its members, its raison d'etre was to serve those members. But now we're trying to expand the access to a broader range of participants. And the LME at the moment, don't forget, it's not a fully electronic market. Only about 30% of the trade is electronic. There's a whole host of telephone trades, and then we have the ring, which is a price discovery mechanism. So as we extend our trading and we get more and more participants, we will capture part of the overall pie that exists at the moment. If we can broaden the access to the exchange, bring more of the OTC market into the lit market on the exchange as well, and introduce new participants onto the exchange, that's all part of what we're trying to do. Every time exchanges change something, the customers have to change it as well. And they have significant costs of connecting to all the exchanges. And it's not just connecting, it's also position keeping, it's the straight-through processing, the link with the clearinghouse, etc. So the costs for participating keep going up. For the exchanges themselves, there has been, over the last few years, clearly a race to lower latency. I think that's stopped for the moment. I think people realize it's no good having the best Ferrari in the showroom unless you have the brakes as well. There's certainly more of a focus on pre-trade risk transparency, which is very important. For someone like ourselves, as I say, where we're a mixed exchange, not just purely electronic, our focus actually right now is improving the bandwidth of our electronic offering, lowering the latency, and making sure the connectivity options are broadened as well. I think the other thing, though, is the whole issue of R&D in technology. What are the new ways to trade? There's not a lot of that because everybody's focused on just business as usual. I hope over time, we'll try to look at new techniques and new technologies that, we don't currently use. I mean, there's been a lot of focus on, the cloud and things like this and the way things could trade there, or data could be stored there and this sort of thing. And we're just touching the edges of that at the moment.